Hey, what's going on, my friends? It's your man, Adam Ace Spencer, here with another M1 Finance dividend portfolio update. Today is Saturday, May 7th, 2022. And as you guys can see over the past day, we are down 0.39%. The past week, we're down 0.58%. The past month, we're down 6.15%. In the past quarter, we're down 6.49%. In the past year, we're down 8.65%. However, all time, we're only luckily down 3.84%, which gives us a current value of $2,199.39. As you can see of that, our market gain is negative $129.96, which is basically the fluctuation of the stock prices. And you can see our earned dividend is $76.41. And when you subtract our earned dividend from the market gain, that leaves us with a gain of negative $53.55. And so, my friends, right now, the market is still bloody. It's been bearish. It's been continuing kind of, we have these little like fake outs, so to speak, that make us think, oh, the market's done going down, and then it kind of continues to go down. And we're obviously feeling it a little bit here inside of this portfolio. Not nowhere near, though, nearly as bad as our growth portfolio. So those of you out there who are like, oh, don't do dividends and dividend stocks and I'm pretty confident most of y'all are probably crying right now and wishing you had dividends. Our growth portfolio update, we'll do that tomorrow. You'll see that we're doing really well over here compared to that portfolio. And so when we scroll down and we take a look at our portfolio and see who is doing well, who's not doing so hot, you can see at the top of our list is Coca-Cola, who is up 37.61%. Then you have PepsiCo, who is up 31.23%. Then Procter & Gamble up 22.99%. Johnson & Johnson up 15.68%. Newtek 13.24%. And then our second REIT, which is Realty Income Corp, is up 9.87%. Now, unfortunately, in the red, we do have Verizon Communications, who is down 11.38%. 3M down 22.82%. JP Morgan Chase down 25.74%. And Innovative Industrial Properties, our third REIT, is getting hammered, down 50.71%. Ooh. Now, my friends, we obviously aren't, like I said, doing nowhere near nearly as bad as other portfolios out there. Like, I'm actually happy with this, considering how bloody the market has been this year, how bad, everyone's portfolios are going. So this isn't as bad as it could be. Am I happy with it? Of course not. But hey, I get it. It's part of the territory. When you are investing for the long term and not the short term, you will absolutely have some dips and you're going to have some peaks, right? It's going to go up, it's going to go down. And that is part of investing for the long term. Now, again, this dividend portfolio, this is nothing. This isn't that bad compared to other portfolios. So keep that in mind as you start your investing journey. Understand that there will be times when the market's not doing so hot, and there'll be times when it's doing really well. And you want to continue to take the same approach that we've been taking this whole time, which is a dollar cost averaging strategy, where you are able to benefit from the ups and the downs. Too often people try to time the market. And as Warren Buffett always says, it's not about timing the market, it's about time in the market. And that's exactly what we continue to stress and implement on this channel. Things are going down, over here, things were down over here. And we didn't stop contributing our $25 a week. No, we continued to do it through those downturns and when things get choppy and it gets so kind of messy and it's not so, not so pretty out, well, we will be there continuing to invest because we believe in the companies in our portfolio and that they will, be around for another 5 years, 10 years, 15 years, 20 years, whatever it might be. But again, this is a marathon and not a sprint. So we aren't phased. We're not worried about this being down 3.84%. Now, when we look at our activity, you can see for the month of May, we have received a dividend payout from JP Morgan Chase on May 2nd, which was for $1.57. And then we received a dividend payout from Verizon Communications on May 2nd, which was $2.73. Now, coming back over and looking at the whole portfolio, you can see, as I mentioned a moment ago, obviously, this isn't, things have gotten kind of choppy over the past few weeks, like pretty much I'd say once April kind of came around, you can see it was like the beginning of April was kind of fine. And then all of a sudden it was like went up, it peaked, and it was like they played with us, made us think everything was going to run. And then it just kind of started to go down. And right now it's kind of, it's in a little bit of a slump, right? It's kind of going down. It looks like it's in a downtrend, so to speak, or at least it's like a plateau, right? Again, this isn't necessarily what you want, but it can't always only go up. Of course, that would be the ideal scenario, and that's, of course, we all only want it to go up, but it's not how it works. It's not going to happen, and this is part of the game. If you're playing the game, you got to understand, again, there will be times it's going to be up, there will be times it's going to be down, but the key is to just continue to contribute towards your portfolio, whether or not it's up or down. And of course, if you can kind of stack up and put cash on the side when things run up, and then that, hey, I'm going to make sure I kind of make up for those weeks that I wasn't contributing. Well, if you're putting it on the side and you're stacking up that cash and you're just waiting for, these bigger, a big dip, again, it's not about timing. It's about time in. But that could be an effective strategy where, hey, like I don't really think things are going to continue to run up. It's been really hot. RSI, MACD levels are all high. We expect things to run down, cool off at some point and come down. Well, then that might be when you would go ham and just load up, making up for the weeks you weren't contributing when it was running high. But again, I don't really worry about that. We just set our M1 Finance portfolio on auto deposit so that the payments will be automatically contributed into our portfolio every week, and it will take care of buying the appropriate shares and making sure that we continue to contribute consistently, regardless of how the market is going up or down. It doesn't matter for me. I just make sure I got money in my checking account so that M1 Finance can just grab that $25 and put it here inside of my pie. So, my friends, I am going to wrap it up there. I just wanted to, again, as usual, give you guys our weekly update, but also remind you to be persistent and to continue to invest. Yes, the market will be bloody. Some saying, oh, we're in a recession. Others are saying a recession is coming. Some think it's not going to actually hit us until next year. Either way, it doesn't really matter. We don't know if maybe this was the bottom, right? And things could just run from here. And if you were in a position where you're like, oh, I'm going to wait, I'm going to just stack up my cash, put it on the side and catch the dip. We don't know when the dip is done dipping, right? There have been numerous dips this year that we thought things were done, and then the market would just keep going down. And, you might take that approach and then end up missing out on the great opportunities that have presented themselves over the past few weeks. And I get it. Again, it's hard to decipher and break down what's a great opportunity compared to the market being horrible and it's bloody and it's red. But that's kind of what is a good opportunity. When the market's doing bad, that's usually when, you want to find the best deals and stack up, load up on stocks, because at some point it will rebound. Now, of course, this isn't legal or financial advice, but history tends to repeat itself, especially with the stock market. So I'm not too worried about it rebounding at some point. The question is when. It could last this, we could be in that recession, and the market could unfortunately drag on like this for another year, 2 years, maybe a month. more day for all I know, for all we know. So that's why I said just take this dollar cost averaging strategy approach, continue to invest every week, regardless of how the market is doing. And, we'll let our portfolio do its magic, work itself out, where again, you have broken down your pie based off of each company, each slice, and you've given it a actual target as to what percentage of the pie you would like it to be. And that $25 a week contribution will buy the appropriate shares to make sure our pie stays intact and we have the right percentage for each slice or each company that's here. So, my friends, yes, as I said, I am going to wrap this up. I hope this is motivational, encouraging. Do not give up. Do not be discouraged if your portfolio is down. As you guys can see, our portfolio is down. Make sure you check out tomorrow's update because our growth portfolio is down even more. And you might need to see that to feel encouraged. Maybe you're like, ooh, nah, this is really good compared to my portfolio. You're killing it. Well, like I said, check out tomorrow's update, and that might help you put things in perspective. But all right, my friends, you already know what it is. I got to keep it moving. If you haven't yet, smash that like button. I do appreciate you guys watching, and you liking the video does help with the YouTube algorithm. And of course, let's go Celtics. But all right, my friends, you already know what it is. I got to keep it moving, but I'll see you in the next video. Peace.